Hey there, it's Mitch. The future's so bright, I gotta wear shades. Actually, these are prescription sunglasses, and I left my regular glasses in the car, and I just got up here, and I just didn't have time to run back down to the parking lot and grab my glasses. So I'm going to be wearing shades, but I don't mean to be rude by wearing sunglasses. No, I'm not sitting here pretending to be cooler than you. No way. You're the coolest because you're my viewer. So you're watching Be the Boss of Your Money. This is my live stream every Monday through Thursday at 4:30 p.m. We talk about investing, what's going on in the latest in financial news, what you need to know to stay invested so you don't make knee-jerk reactions and bail out at the worst possible time and miss a big rally like a lot of people did in March of 2020. It's about investing, of course. It's about borrowing, mortgages, credit. It's everything about personal finance. But the stock market is a big part of it, and there are a couple of things going on. So what we're going to do is put my glasses on so I could actually see what I'm doing. We're going to roll a quick intro, and we're going to get into the child tax credit, Boeing rebounds from yesterday. What else are we going to do? Oh, yeah, Robinhood pays a massive fine because they were so egregious in the rules that they broke. They come off like doves. Yeah, I don't know, like innocent, but I don't think that's the case. So here's the intro. We're going to roll it, and it's going to be a good show. We're going to go through the first half of the year review and get ready for the next half. Here we go. Hello, welcome to Be the Boss of Your Money. This is my live stream every Monday through Thursday at 4:30 p.m. It's all about personal finance. While you're watching this, if you have any questions about the subject matter that we're talking about today or anything that has to do with personal finance, feel free to ask me in the comments. I love hearing from you. It is by far my favorite part of doing this every day. If you're watching this in the replay, I'd like to welcome you as well. Certainly, if you have any questions, hit me up in the comments. I will definitely see those, and I will definitely get back to you. My name is Mitch Goldberg. Again, you're watching Be the Boss of Your Money. And let's get into the heart of the matter. A couple things we're going to do. So first off, we're going to do a quick share screen. And I'm going to show you some of the big things that I'm looking at. We just finished the first half of 2021. If I told you how good the first half of 2021 would be, would you have believed me if I told you this a year ago? Maybe not, right? It's been a awfully good market. So what we're going to do is we're going to take a look and do a quick rundown of the day's action. Boeing catches its loss from yesterday. We talked about that yesterday, saying, hey, Boeing shouldn't be down on its news of like 270 new orders from Continental. What's with that? Stock comes right back up, and we're going to take a look at Bitcoin, at gold, at small cap stocks, large cap stocks. So first thing we're going to do is do a quick share screen. Pop myself up into the corner, up over here. Before we get into this, let's take a look at this crazy year, okay? S&P 500 hits a new 52-week high today, also a new all-time high. So how did the market do? Year to date, up about 14.4%. I don't know if you could see that on your small screen on your phone, so let me blow this up. Okay, S&P up almost about 14.4% year to date. That's the large caps. By the way, the NASDAQ and the Dow each were up about 12%. NASDAQ was the laggard for a lot of the year until about the last 5 or 6 weeks when the technology stocks finally stopped going down, and they started to go back up. Okay, so let's take a quick gander at small cap stocks. Because if you think, the S&P up almost 14.5% the first half of the year is good, let's take a look at the small cap stocks, up 17%. It's tough to highlight that. 17%. up on the small cap stocks. That's significant because that jives with what we've been seeing in the first half of this year in economic recovery after the pandemic-induced shutdowns last year. So as we come out of the recovery, small caps are doing better than large cap stocks. It's important because small cap stocks are more sensitive to the domestic economy. They get more of their revenues and earnings domestically as opposed to the overall S&P 500, which gets about almost 50% of its revenues from overseas. So it's a better barometer of how the U.S. economy is doing, the small cap sector. Plus, these companies have a little bit harder of a time raising money in the capital markets. It makes it a little bit more challenging to own small caps, but they are just tearing up the place. So what else should we take a look at? Let's take a look at lumber prices. Lumber prices, this is one of the big stories of the first half of 2021, how we saw lumber prices take off like crazy. They're still about a double in the last year. Don't get me wrong. Lumber prices are still up, but it was when you see those parabolic charts go straight up, those usually get repealed. Okay, so let's see if they have a nice chart in here. Okay, you see that year over year. So still a lot, still up a lot. Believe it or not, that you can't tell how much that is over here, but that is from here to here. That in and of itself would be a nice chart. But this whole move from down here all the way up to here, that just gets sliced right off. I guess you'd say the next support level is this one right over here. Let's say 600. We'll see. We'll see how it goes. Okay. What else? We took a look at the S&P. We took a look at the Russell. Let's go take a look at gold. Gold is off over almost 7.5% year to date. That's a pretty meaningful insight, or it provides some meaningful insights. Gold is considered a hedge against inflation. We're seeing a lot of inflation now, but gold is going down. So either gold is no longer an inflation hedge, and whatever it was for the last, 6,000 or 7,000 years doesn't count anymore, or gold is signaling that inflation is transitory, and over the intermediate term, inflation will most likely go back down to its baseline before the pandemic. Where do you stand on this? But gold is usually, tells us a story. Now, a lot of people are saying Bitcoin is where it's at. So let's take a look at Bitcoin. Bitcoin is up a little bit. It's not up huge for the year. It's maybe it's up 9-10% for the year. Now, I'm not saying that that's a bad thing, but if you look at how much Bitcoin was up here, and it was the high on it was like 67,000, and now it's down to 35,000. That's another big story of 2021. So gold, lumber, Bitcoin, these were really big stories on the year. And what's this one? Gold, we already checked out. And let's take a look at oil. That's the other big story of the year. A lot of big stories so far for the first half, but oil, year to date, barrel of oil up 52%. Energy stocks as measured by the XLE, that's the big XLE, that's the ETF that tracks the energy sector. That wasn't, let's just take a look at how much that was up. Okay, give it a second to load. Have some iced coffee. My iced coffee maybe cost 10 cents. So my iced coffee today is actually even cheaper than Graham Stephan's iced coffee. How do you like that, Graham? Put that in your pipe and smoke it. Okay. This here one is up 42%. So the energy stocks haven't done quite as well as the price of energy itself. But it used to be that energy stocks would do better than the price of oil. If oil, it would be more leveraged, but that's not happening now. And I think it's because the energy companies themselves are being more careful with their cash. They're holding on to cash more, and they're not letting themselves get carried away with overproduction and speculative projects. So it's a very healthy industry right now. And the dividend yield on the XLE is 4.85%. If you're looking for some yield and a place where earnings are pretty good, fundamentals are pretty good, energy sector is one place that you could consider. That's not a recommendation, just tying the two together and seeing if it makes sense for you. And I think the other big thing this year is the meme stocks. If you take a look, I want to show you something. You see this over here, this line over here. It says for AMC $1.91 to 72.62. This is AMC, but if you see, it's come off a ways from its high. So it was as high as $72, and it closed at 50. It closed at 56. Okay. So that is, it's come off quite a ways, but it's obviously it's up a heck of a lot too. This company was at one point considered a bankruptcy candidate. The interesting thing is once these stocks go up, these companies are able to sell new shares into the marketplace and raise capital, recapitalize their balance sheets, and all of a sudden these companies become survivors. I don't like to pay a high price for a survivor. I like to pay a high price for a thriver. There's a big difference. But GameStop, 483 down to 214. If you look at these lines here, from the red and the green, this is the spread between the high and the low. And if you look at these stocks, how much these are all down from their highs, especially Clover, Koss, Wendy's. I'm willing to bet that most meme stock investors are getting their asses handed to them. A few people made money and got out. And then there were a few people who are still holding on for dear life, hodl, and waiting to the moon, right? Waiting for to the moon. So that's the big thing. The first half of this year, very interesting. Meme stocks, crypto, energy, and lumber. These were, to me, the really big stories as far as financial asset prices go this year. Let's take a look at the U.S. markets. Dow today up 210 points. This is like a reversal of yesterday. Yesterday, the Dow was down, but NASDAQ was up. Today, it reversed, where the Dow was up and the NASDAQ was off a little bit. The S&P was flat. Gold was up $6. No big deal, less than 0.5%. Energy continues its winning ways. The VIX is down to the 15s, if you see that. Volatility stays low. If you remember a long time ago, I said if we see the VIX get under 20, we've got a higher market. It's exactly what happened. Russell 2000 was up a smidge, up 7 basis points, barely anything to consider. Let's go back to the watch list. Okay, let's take a look at the FANG M stocks. My FANG M stocks is Facebook, Amazon, Apple, NVIDIA, Google, and Microsoft. Okay, I took out Netflix. I could have left the N in there for Netflix, but the point of this is, to me, it's supposed to be a small group of stocks that makes a lot of sense to follow. I could add 20 stocks to this, but then it might as well just follow the S&P or the NASDAQ instead. I want to really give you a better view of individual stocks. The fact that these stocks were mostly off today tells me that it was pretty impressive that the S&P 500 didn't go down today. And that is because industrials and financials and other sectors did very well. Energy and healthcare and industrials all did very well this year to date. So let's take a look at how the sector ETFs did on the day. Okay, so XLE, that's energy, industrials, consumer staples, financials, materials, the right places that you want to see go up. Weakness was a little bit in real estate, utilities, but no disasters. I mean, there weren't anything to shout home about. All right, so that is that. And I'm going to show you one more. Just going to show you one more. Stay with me. We're still doing the share screen. And I'm going to go to industrials. GE we spoke about yesterday. They couldn't upgrade yesterday from JP Morgan. Ford was another story that I've been talking about. Yet Ford said they have to cut production again because of a semiconductor chip shortage. That's going to be tough because GM and Ford both said that they'll make up for any cuts in production in the second half of 2021. Well, that starts tomorrow, and I just don't see how they're going to do it because the semiconductor chip shortage has not abated yet. But Boeing, if you take a look here, Boeing was up almost $4. It was down a little over $4 yesterday. It was up almost $4 today. So right back at you. All right. So those are the big stories. Okay. I see a few people who are out there. Got the heart from Judy. Love you. Josh is out there. Oh, Melody, Diane, how? Melanie is like a streamer extraordinaire, chock full of tips and tricks to make your live streams better. You should check her out. Follow her on LinkedIn. She's also very approachable and a very nice person. We do have a question or a comment. I'm going to take a look at it. I can't see anything without my glasses. I'm sorry. I don't mean to be rude with sunglasses. Like I said, I'm not trying to say I'm cooler than you. I might be cooler than some of you, maybe, right? Just a few of you. Thank you, Josh. Cool shades. Josh says, cool shades. Here we go. I'll put it up on the screen. Thank you very much, buddy. So, yeah, got the cool shades on. Can't see anything without them because they're prescription. So that's really what I wanted to talk to you about today. It's been a really solid first half with a lot of funky things going on. So the funky things included the meme stocks, the crypto, lumber, just things we haven't seen before. Housing has been a stalwart, just in a tremendous bull market. Existing home sales today rebounded to the highest level since 2005. But mortgage demand is starting to slip a little bit. So we'll see if high prices, demand has exceeded supply. But if prices go up enough, then eventually demand goes down. So supply and demand start to get into equilibrium. I think long-term, the demand is going to win out because the millennials are all at once buying homes. Now, when I say millennials, you have to consider this. There are older millennials and younger millennials. It's like a 15, 20-year dispersion between the oldest and the youngest. The oldest were more or less delayed in purchasing a home, getting married, starting families, having kids because of the Great Recession. So now they've come of age. The millennials of age right under them are coming of age. So it's all at once. They're buying houses and they're doing to the housing market and to brands what their baby boomer parents did before them, except that there's even more millennials than there are baby boomers. Now, I know things are different. The millennials have a lot of student debt, whereas the baby boomers went to college for like $3. It's just a completely different ball game. But the millennials are the highest educated generation ever. And I would suspect that the generation after them will probably be even more highly educated and skilled. So let's see how that goes. I want to thank you very much for your time. Your time is very valuable. And the fact that you chose to spend some of it with me means a great deal to me. I'm going to end this live stream now. I will be back tomorrow. I want you to know my setup is not complete. I am redoing my whole setup. So I've got my camera in a funky place. I've got my screens in weird places. I'm just not set up yet, but it's all coming together. New computer will be in Friday. I've got a new curved monitor, like right down over there, that I'm going to start using probably tomorrow. So I'm looking forward to all the new toys. Talk to you soon. Thanks.